Good afternoon, everyone. Philip from Blackpool Markets here, and a happy new year for you all. Hope you guys enjoyed the festive season and the time with your families. The markets have woken up again for us, so it is now the second week of the new year for us here. So we got a bit of a market update for you guys. Hope you guys do enjoy it. If you do give us a thumbs up at the end of the video. Don't forget to click that subscribe button to get to be the first to be notified of whenever we release new videos. And we'll dive into it. So we've got a couple of pairs to go through. Starting off with the Brent, the market surely has been very active in the beginning of the year. You can see Brent is still in this downtrend. A couple of spikes we've been looking at as well. But like I said, we'll dive into it and let's see what we got. So we got the Brent here on the daily time frame. Again, we were looking at this area that was a support and then turned to a resistance over here with a couple of false breakouts. You can see with all these wicks over there trying to pushing the price back up again, but still just continues to plummet past this area, continuing this very strong downtrend that we have at the moment. And on the 4-hourly time frame, we can see it has hit sort of a bit of a resistance area here. So this is from support to resistance. So hopefully we will see a possible continuation in the downtrend. If it does break further higher, we do have all those resistance areas like we have here on the daily. This over here, and also this area being a very key level that offered a previous resistance and then turned to support. Obviously we had a strong break. You can see a bit of hesitation there with the candles, with the opening above it again and then continuing further downwards. So again, back to the 4-hourly, we'll see if we even might have a possible Fibonacci level here as well. You can see here very close to the 61.8%. Actually between the 61 and 50%. So it is a very good key level for the market to continue further in that downtrend. So we will see what happens. We can also see a bit of a wedge forming here. So we can also wait for that breakout if you were a bit more conservative, not wanting to take the trade now just because of the level. So giving us another bit of a confirmation area over here. So hopefully we can see what will happen. If it does bounce, that'd be great. And we've got a long way to go down. So you can see here on the daily, there's not much resistance for us. Besides, we've got a bit of resistance here actually. But if it does break past this level, which it is actually on now, so we can see a possible move further down to this wave C of the wave 2. So we'll see what happens there. If it does break to the top side, again, we do have this area over here. And then if it goes higher, we can look at these two possible areas, the wave 3 we had, and also the wave 5 as well, back at $86 a barrel. But moving on, we will go to a Euro Aussie dollar. So we had some quite interesting moves over there. We had a very big spike to the top side. This is our daily time frame, so very, very interesting, very strong move as well. We can see here it actually broke past that top. So this is one of the reasons why I usually wait for a candle confirmation or candle close to confirm my entry. You can see it broke very strongly. A lot of people would have panicked into the market thinking it's going to continue in this uptrend, but then it just came straight back down and probably stopped out a lot of people. So this candle over here actually gave us a good confirmation to catch this candle to the downside. So you can see a big move to the upside and then got rejected, closed below that level, gave us a good entry at the close of this candle, which was also the base of these previous candles as well, and below that level. So and then we could have entered there and it rode this big candle to the downside for the daily time frame, which would have been a good trade. But unfortunately, we weren't looking at the markets last week, but that's all right. We can see that it has now hit this area of resistance, so we can look for possible moves further to the downside, keeping these area in mind. Previous resistance, you can see a bit of resistance here as well, some support there on a smaller time frame. So if it does continue down, we can look for this area, and also keeping if it does break further down, we can look for other possible areas as well. So you can see here a bit of resistance to support, again some resistance over here, so that could be also another level. And then further down we do have this area over here, which is sort of a bit of a low as well. And if you look on the weekly, if it does break to the upside, I mean there's not a lot of resistance for it to hit, so you can see there's big potential if it does break further to the upside for it to be a big move. But to the downside, we can see we've got a couple of support areas that we can hit for potential take profit areas. Moving on to our EURGBP. So again, on the monthly time frame, we were looking at this last year as well. Bit of an Elliott wave pattern that looks like it. So we've got an A, B, waiting for a C wave now. So the wave B looking like a triangle. We can see our impulse wave following the rules quite well still. Bit of a gap for the third wave. So we can see it also hit this high as well, making a bit of a double top. So we could actually, this pattern might be invalidated as well if it does break past this E over here. Then we know this has been invalidated and we have to redo our count. We could possibly even trade it now as a double top to the downside if you're looking for a bigger move or for a longer sort of trade. We can see here again, we can see very, very nice Elliott wave pattern. So we can, I'll show you here, A, B, C for our A waves, and also in all the other waves we've got A, B, C over here. Another 3-wave pattern. It does look like another 3-wave pattern for the E wave. So hopefully if it does break past this point, past this D wave over here, we will have a good confirmation. And obviously if it breaks that high, we do have a very strong confirmation that it could continue further higher. So we will see what it does happen there. If it does go to the downside, do keep in mind that we do have all these previous support areas that could offer support again, and then also this low over here, which did also offer a bit of consolidation, which was a bit of a consolidation zone back here in 2005, 2006, all the way to 2007. So you can see that is also a very key level. So do keep that in mind if you were looking to keep this for a long haul, maybe a couple of years. You could hold on to these kind of trades. But on a shorter time frame, like the daily, if it does move, but keep to move between these two consolidating lines, we can look for possible trades between these. But again, for the monthly and the weekly, it does look a lot better to take it for a longer term trade. But again, it's up to you, so whichever you prefer. Moving on to the Euro Japanese yen. So again, we've had this big spike to the downside. We can see here on the weekly, it has actually hit a previous resistance area that was also offered us support. So you can see it has broken past it again, not waiting for a candle confirmation. People would have taken the trade and possibly gotten stopped out over here. You can see candle close just above that support slash resistance area, and we can see a possible move further to the upside. If we look at the monthly, we can see here it has offered a bit of resistance there as well, some consolidating areas, and you can see there a bit of support. Let me just get rid of this. Bit of support back here as well, back in 2003. So it's a very strong line. It's been proven over time to hold quite well. So we will see what happens now if it does continue further to the upside. But if it does break, we do have this low over here. So coming back to the daily, it does look like it's also, this was what we call a bit of a fake out as well. So it does price break back. It gives us a strong move back again with a big, nice bullish candle. So we could see a possible continuation up. But we do also have this area over here. So you know, we could have a look at maybe the 1 hour time frame. You could trade it to this area over here, which is still quite a fairly big move of 160 pips about. So could be a very good trade. Also, if you're looking for more shorter time frames, we do have a bit of does look like we have a bit of a consolidation here as well. Actually, I'll get rid of this. So we can probably wait for it to break this trend line. And also we do have it that hit quite close to this. You can see resistance to support now as well. Had a bit of resistance with these wick touches. Base of the candles, again there with a wick touch, and now here over here. So it could possibly move up. So we'll just keep an eye on it. So I mean, a couple of good trades, a couple of good entry points that we have marked out there. So do keep that Euro Japanese yen on your charts. If you have a little post-it note, that's what I do. Always write it down and chuck it or put it here at the bottom of my screen, so I do remember what key charts I am looking at for the week. So then moving on to our pound Kiwi. Let's just find it over here. So again, it's the weekly time frame. So a lot of high time frames. We'll move it back down to the daily. You can see here we've had this false breakout of this top. Again, it offered a bit of here we go, support. So you could have actually traded this and taken your take profit up over here. So that was a good trade. Going back to the daily, we can see it has now come back to this previous area of consolidation. So you can see here we'll mark it out over there, using those bases of the candles as well, all those wick touches. Over here you can see that was also close to the area, so it does look like it has now used it as a bit of resistance, so hopefully we can see a possible continuation downwards. If it does break to the top, we can see we do have all these areas or these key levels over here that offered previous resistance and supports, a bit of resistance here as well, so that could be a good area for take profit targets if you're looking to trade to the top side, also to the downside. If it does go further down, if you take it now, do keep this area in mind over here, which offered up previous resistance and also a bit of support and also a bit of resistance here and here. If it does go further past that, obviously we can look at our lows. Looking back on the weekly, you can see these this area over here has offered us a bit of previous resistance here, and again we had a false breakout over there, so which did not actually which did not hold. Again, we had a bit of resistance here with the base of the candle as well. So moving on to our NZDCAD. So here we've got the 4-hourly time frame. Again, we can see that big wick to the downside. If you look on the daily, actually keep it on 4-hourly, so you can see that big wick to the downside, closed quite far above that area. So it is a bit of a consolidation. So this is the wrong pair. Kiwi, there it is. Again, okay, there we go. So yes, similar to all the pound pairs, you can see it has also made that wick further down. This looks a bit better. So you can see here, again, fairly above that area. But if you go to the daily, so we've charted it here, the line on the base of those candles, and if you move down to the daily, we can see that has actually closed again just above that area of support. So hopefully we can see a big move to the upside now, but keeping in mind again that we do have all these resistance areas that it can hit if it does go up. So again, on the higher time frames, always keeping these higher time frames in mind when you do take a trade. We also have a bit of a line over here that connects all these candles, so that could also offer previous resistance. We could possibly go back into this consolidating area over here, and then wait for a further break. But again, on the smaller time frames, we can trade between these lines. So again, we've got about 200 pip move, or if you traded to here, 140 pip move, which is quite nice. If we do break past this area, we have around about, say, 700 pips to this line over here. So a lot of good moves to trade. If it does break further downwards, we can see we do have these areas over here, using this tip of the wick as a good target area. So if it breaks past, again, we've got about 400 pips, and obviously this I would say this base of the candles over here, not the wick, as this offers a stronger support area. So again, in about 900 pip trade if it does break past here, so that'll be a really good move as well. Then moving on to our GBPNZD again here. So you can see here we have actually sorry, my mistake, getting all mixed up here. NZDCAD, there we go. So again, we were looking at this last year as well. So we have had that head and shoulders pattern that we were looking at. So we're still waiting for it to reach that level, but you can see it is now on the weekly. Last week it has given us a very strong candle to the downside, confirming this, hopefully confirming this neckline. So there's still a chance, as we know, that we only take estimated guesses, so there is still a chance that it can come back, but this is a very strong indication that the market has sort of committed to this area. So hopefully it reaches here, and then we can take a trade accordingly. So using this right shoulder as a trade to move further upwards, and then obviously if it breaks this neckline, we can look for trades even further to the upside, looking at these areas over here for take profit targets. Also, you can see here this neckline has offered us previous support. Again here, bit of consolidation here with these candles and these wicks and the base candle bases touching. We can see here back in history as well, it has offered us a bit of previous support all the way back to 2014. So it is a very key level. If it does break, we can look for quite potential violent or very strong moves in the direction that it has broken. If it does break past this level over here where the shoulder is, we do have a fair bit of movement to go through. So we've got a bit of a ranging area over here that you can look for. So, but I would say once it breaks past that, we can look for this possible low where these bases of the candles actually meet here. And you can see it has offered us previous support as well. So that could be a good target once it breaks this consolidation zone. Just be very careful if you are going to trade in between these zones. It can be quite messy, as we see here. Not a lot of clear or good movement. So sometimes it gives you a good clear. You can see as it did here. and here this was a bit up and down, but you can see again moving straight back to that level, which was quite nice. But just keep in mind, if you do trade between these consolidation zones, be prepared to sit through a consolidation. So it could take a bit of time for the market to sort it out once it reaches these areas. But once it does break out of them, it does give us very nice strong moves in the direction of the trends, or in the direction that it did break. So hopefully we can see some good moves. And then moving on to our NZD Swiss franc. Here we go. So again, we have reached a nice big candle over here. You can see it's broken to the downside a couple of days ago. So here on the weekly, you can see last week it was made that big wick. Again, hitting this support area over here. So, well, resistance to support. You can see offered a bit of support from these candles over here. And this is my example again. So it has broken past. People would have entered the trade being scared of missing out. We call it FOMO, so fear of missing out of a trade. And this, people would have taken the trade because they saw this big move. Again, possibly could have gotten stopped out. Well, hopefully your stop losses would have taken you up by now, because this is quite a big stop loss to hold on to, or big position to hold on to. So hopefully we will, if you are still in it, please do manage them very carefully. But yeah, so it does give us a bit of a confirmation further to the upside, but we also have this section over here that can give us you can see it is actually on it now, a bit of resistance, which could possibly continue up further to the upside. It does almost look like we have a trend line here. Even though this wick gave us a fast breakout, you can see it connecting these two bottoms has come quite close to this. So hopefully we can see it is a very good level. Also putting a bit of Fibonacci in, coming close to 61.8%, which has given us another third confirmation. So now we've got this trend line, which is our first one. This also, the support line, which is our first one, then the trend line, which is our second one, and now we've got Fibonacci, which is our third confirmation. So it is a good key area to look for entries into the market to the upside. If it does break further to the downside, make sure to manage those trades if you are looking to trade up. So like I said, if it does break down, make sure to manage them properly, and then hopefully we can look at switching our positions. If it doesn't give us a pattern, that's fine. We can just wait for another one. But if we do get a pattern on that break, we can look for these areas over here for possible take profit targets, obviously using that low as well. On the weekly, you can see this one over here especially has offered us previous support. So it is a good key level to reach to. And again, if it does come into this section over here, I do expect consolidation as well. This area over here, we can see some possible consolidation, as it has offered us previous support and resistance areas. Same with this one. So this area could waste a bit of time. But if you were to trade on the 30 minutes, you can also do that as well. So trading in between these two lines, or even the lower time frames as well. But now moving on to our last pair, which is the NZDUSD. I actually posted one of these on the Twitter page, so do have a look at that. You can see the very in-depth detail that I've labeled this chart. But here you can even pause the video as well if you want to have a look at it. So this is again for our Elliott wave fanatics or Elliottians. We can see here that is actually following the Elliott wave quite nicely. We were looking at this previous wave for a possible turnaround, but again you can see it's broken past quite strongly. So we had to relabel a bit. This ended up being a double zigzag, which is now labeled as a WXY. So you can see our internal waves of this whole process over here. So you can see which we had an impulse wave for the wave A wave B, which looked like a zigzag. You can see our ABC waves, and then expanding ending diagonal, indicating a bit of a weakness in the market, and it did give us a very strong ABC movement to the upside. And again, we continued further down for another ABC to complete that Y wave. You can see we've got our waves 1, 2, again a very nice extended wave 3, which follows our Elliott wave guidelines quite well, and then moves back to the wave 4. Quite a very complex correction over here, a bit of complex move. It does look like a bit of a leading diagonal that we have had here for the wave 1 of this impulse wave, but it still follows that picture quite nicely. So, and then again we started off this possible wave 1 with a very strong impulse. You can see our waves 1 and 3 are quite similar in length, and then our wave 5 is very strong as well. So we does look like we have extended wave 5, so it is a very nice pattern. we can look for a possible retracement now to this previous wave 4 over here. So I'll quickly go to 30 minutes so I can show you a bit better. So this can be a possible area for the market to come to finish at wave 2 and then continue further to the upside. So we can also use our Fibonacci retracement as they do go hand in hand with Elliott wave. You can see it is on the 50%, spot on the 50% retracement, that wave 4, so that is a very strong level. Also do keep in mind this second wave can retrace all the way to 61%, but we do have two levels, key levels over here, which is our freest wave 4 and our 50%, so that is a very strong possibility that the market can come past that. But since it's been a impulse as well, a very strong impulse in fact, we can also see a 32.6% or 38.2%. But these are all key Fibonacci levels. But like I said, this 50% is looking rather good, so we can wait for that and see what happens. Using Elliott wave is actually very handy for more investment sort of trades, I would say. A bit of a longer haul as it does sort of develop. You need to let it develop more before you can sort of be more sure about it. Obviously, like the perfect example was the waves we were looking at before. We were looking at this as a key area to turn around. We thought this was a possible waves 1, 2, and wave 3 forming with our internal waves 1, 2, and 3, but it turned out that it ended up being waves A, B, and C with an extended wave C, and they continued further to the downside, creating this very, very strong ABC move, finishing the Y wave of the wave. And now we completely finished retracing this waves 1, 2, 3, 4, which was a running flat, and then you can see our wave 5, and then completing that. So hopefully we can see a continuation in this this sort of uptrend on the hourly. On the daily, we can see it has. We'll rather go to the 4 hourly. We can see it has been very strong. So hopefully we've seen an end to this big downtrend in the Kiwi, and we can see the Kiwi dollar getting a bit stronger. But again, news also does affect these kind of things. So with Jacinda and our two prime ministers, 2 or 1 prime ministers doing their things, so we'll see. And they've surely made the Kiwi dollar a very interesting pair to keep an eye out on and watch it move and see how it responds to the news. But that is it for the pairs. I hope you guys did enjoy it, and welcome to 2019. Feels kind of weird to say. But thank you very much for watching. Like I said, click that like button if you did enjoy this video. Click the subscribe button, followed by the bell icon to be the first to be notified of whenever we release new videos. If you want to get in contact with us, please do so. Our contact details will be provided down below in the description of the video. If you want to get in contact with us via live chat, please do so. You can go to blackbullmarkets.com, click on the little green button that says live chat at the top of the screen, and our friendly support team will be there for you. Also, if you prefer to contact us over the weekends or via email, please do so. You can email us at support@blackbullmarkets.com, and we'll get back to you as soon as possible. All right, everyone, thanks very much for watching. From everyone here at Black Bull Markets, safe trading.